Let's welcome in our next guest, Gautam Chhaochharia, Head of India Research, UBS Securities, is now joining us on the phone line. Gautam, markets have hit a record high. What is the range that you're looking at? Are we still at the higher end of the range?
So the base case, fundamental-wise, we have gone ahead of the range clearly. So markets are clearly looking ahead of fundamentals, not just near term, but even for this year. It's trying to look at the opportunity beyond the next 1 year in terms of next 2 to 3 years. Having said that, from a trading perspective, our upper end of the range, which is the overshoot range, is around 9,700. But our base case is 8,800. So 8,800 is already breached. The upper end of the range is something which the market can look at if it wants to overshoot. But that will be driven more by sentiment rather than fundamentals. Fundamentals based, I think the fair value for markets is 8,800.
Right. As far as the momentum in the market is concerned, what is the sense that you get from your various clients when you talk to them about election? What has been the impact? What is the momentum that they feel will happen?
So momentum-wise, most investors were expecting BJP to do well, but obviously the scale of the win has been a big positive surprise. And markets in general, both foreigners and locals, have looked at this government as a good sentiment positive because it gives them confidence that reforms will continue. And in that context, this momentum reflects the hope around the same reforms story for India, which bodes well for the longer term.
Right. As far as the political premium is concerned or political stability is concerned, do you think investors, at least globally, would start to look at much more political stability in India, which they were not factoring in earlier?
So I don't think the global investors ever were that worried about political stability. In fact, the global investors have remained overweight India. They trimmed a little bit late last year, but that was less also about demonetization, but also about what is happening to emerging markets in general. So I don't think the global investors are that worried about the political stability in India per se, and even local investors are not that worried. But the issue is when they get this kind of win, it gives investors comfort that perhaps the reforms agenda can get a push up further.
Right. Gautam, a person like you would always look at earnings. Do you think that earnings have to follow? Valuations are not cheap. That's why even a relief rally may not last for long?
That would be our base case because, as I said, the earnings are still over-optimistic. And what we have discussed in our note is basically what will matter to markets beyond the initial 1 or 2 days of sentiment rally is how the government interprets this mandate and if this leads to any change in policy trajectory, if at all. Because over the last 2.5 to 3 years, the government's policy stance has been of macro stability, including fiscal consolidation and inflation control, along with proactive reforms agenda. Now, this win means they go further down anti-corruption narrative or more reforms or even more populism in the context of the farm loan waiver in UP. So I think what direction they follow and what mix will matter for market fundamentals beyond the initial couple of days of rally.
Right. As far as flows are concerned, do you think that liquidity is very high? It was visible from the recent IPO as well. So you think that will keep chasing the markets if there is a correction?
So liquidity has been high for a while. There's nothing new per se, both local as well as global. You can argue or you can derive comfort based on few IPOs here and there. Liquidity has been high, but risk capital has gone up because of the market performance also. And that's always a chicken and egg argument or circular argument. So I won't like to just get bogged down by that. I'll still look at fundamentals more closely.
Right. If you just look at the top 10, 15 movers today, Gautam, you will see that private banks and select PSU banks are doing well and cement is doing well. So do you believe this is the best two sectors to play the economy if the economy has to grow?
If the economy does well or accelerates, then financials and building materials obviously are the bigger beneficiaries.
Right. So it's time to be overweight on these names, or market is going overweight on these names considering that economy would do well?
So markets have been overweight on financials selectively. Cement specifically, they have been overweight, and that's reflected in the stretched valuations that sector has. So that's an obvious trade for the market when it's trying to play momentum. But fundamentally, we would advise caution on cement specifically. Financials, we remain positive, but on a selective basis. It's much more on a stock selective basis.
Gautam, you also track mid-cap space very closely. What's happening over there? What are clients asking you? Aren't they worried about valuations?
So they have been worried on valuation for more than a year now, but the sectors continue to do well. And that is where the market momentum and the marginal risk appetite from the local flows matter and has mattered. And that will be remain the key driver for multiples. Again, underlying fundamentals-wise, obviously it looks very, very stretched.
Gautam, thank you so much for taking out time for us. Always good to get a perspective from you. That was a view coming in from UBS saying that markets will follow earnings. As of now, of course, the trend is on the positive side.